Jan, it's time to talk about your money, and if you're one of those who does have money in the stock market, is it time to sell? Stewart Welch from the Welch Group joins us to give us some analysis and perspective. Good to see you this morning.
Morning, Mike.
You know, a lot of people have been predicting, those in the so-called stock market analytic world, that we could have a crash of some sort in sometime this fall. And some people are panicked because there's a lot of world events going on. We don't know what's going to happen with the presidential election. So what about that?
Well, Mike, first of all, there is a lot of nervousness.
Yeah.
So I'm getting a lot of chatter about should I get out of the stock market? And I think the short answer is no. I have been doing this for 30-something years. I have never in that whole time identified anybody who's able to time the stock market, get out and get back in right as a strategy. But I do think that depending on what kind of investor you are, you may tweak your investment strategy related to stocks.
Well, let's jump to those categories then. What if about, you're about to retire, you're already retired?
Let's start with the retiree. So the retiree here, the cardinal sin in investing is selling stocks when they're temporarily down in order to raise money for cash flow. So you don't want to do that. So my recommendation is that you have over in what I'll call CDs or money markets or things that are not very volatile, at least 3 years worth of cash flow, the money you're going to need from your portfolio in order to drive your lifestyle.
Okay.
And ideally we'd have that at around 10. So you want that parked over there. If the market goes down, you can go to that pool of money and give the market time to recover.
Now there may be some folks out there who don't directly invest in the stock market, but they do so through their 401k, the retirement plans, and a lot of those are some who are pre-retirees.
Yeah, so pre-retirees would be somebody who's, let's say, within 10 years of retiring, and I think they're looking back at that retiree, you're going to want to build this safety net, that number of years worth of cash flow. And you've got 10 years to get it done. So right now the market's at a near time high. You might take a couple of years worth and go ahead and pre-fund that in that safety net.
Okay.
And then as you approach every year, 12 months from now, look again. If the market's way down, maybe wait a little while, market's back up, take another year out. But when you get to retirement, let's make sure you have that 3 to 10 years worth of cash flow in that pot.
Okay, we do know if you're younger folks out there, you want to start investing early. What if they already have? What should they do?
Well, I think that they are going to want to be more stock oriented. In fact, volatility in the stock market is probably their best friend. Stock market goes down, they're putting money every month.
If they're doing that though.
If they're doing that, putting money every month into their 401k, they're buying more stocks at lower prices. So that's dollar cost averaging in the market. They'll probably want to be more heavily invested in stocks and just have some faith that the stock market's going to work out, which it has over decades.
Okay, so I shouldn't hide all my money in the mason jars is what you're telling me.
You should definitely not do that.
Okay, Stewart Welch, some good advice this morning. We appreciate it.
Thanks, Mike.